Welcome back to the Deep Dive. Today, we're embarking on a really fascinating journey, especially if you're dreaming of a new chapter in Portugal.
Mm.
We're talking about unlocking the freedom, the flexibility, becoming self-employed in this incredibly vibrant country.
Yeah, it's a big topic for foreigners.
Exactly. And we know this is relevant because, well, we're part of the Access Portugal team.
That's right.
Our whole mission is basically opening doors to Portugal for people around the world.
Mm-hmm.
And this specific topic, becoming your own boss here, it comes up constantly in our chats. For good reason.
It really does.
So get ready. We're about to unpack everything you need to know.
Absolutely. And our deep dive today, it's built on a pretty comprehensive stack of sources we've gathered.
Okay?
They really lay out the entire roadmap. We're talking from those critical first steps, navigating the different tax regimes,
Right.
all the way through to the benefits, the challenges, even how you transfer an existing self-employed business from another country.
Wow. Okay. So comprehensive.
Very. Our goal here is to cut through the jargon, give you the essential insights, make sure you feel genuinely informed, prepared, but without getting totally bogged down in details.
Like a shortcut.
Exactly. Consider this your shortcut to making a really informed decision about your future here in Portugal.
That's the mission today, then, to demystify the whole journey of self-employment in Portugal for foreigners.
Let's do it.
We'll guide you through all the crucial bits, step by step, so you can build a clear picture and, decide if this path is actually right for you. So let's kick off with the big question. Why Portugal? I mean, it's a country that constantly shows up on lists for attractiveness, quality of life.
It really does. The appeal is undeniable.
You think stunning coastlines, history, amazing food, that welcoming culture. A sense of safety, too. It's quite appealing.
Definitely paints an idyllic picture.
But here's where we hit a really crucial piece of context, something key from our sources.
Okay.
While the quality of life is, yes, undeniably high, the wage structure, it's well below the average of other Western industrialized nations.
Ah, yes. That's a critical point.
It's not just a throwaway comment. It's a major factor for anyone thinking of moving, especially if you're looking for, financial stability or trying to maintain a certain earning level.
Right. It changes the calculation.
And it's precisely this contrast that makes self-employment such a compelling and sometimes, frankly, necessary alternative for a lot of immigrants. So for you listening, maybe weighing these exact things, this deep dive, it's a real shortcut to understanding if, and maybe more importantly, how self-employment could work for you, maybe even become your preferred path.
That wage structure point is absolutely defining for the Portuguese economy. Understanding what that means is vital if you're a foreigner wanting to build a sustainable life here.
Yeah.
For many, just stepping into a traditional job might not give them the economic stability or, the specific earning potential they're used to back home, or maybe just what they need for their goals.
Right. It might not cut it.
Exactly. And that's where the appeal of self-employment really kicks in. It promises independence, flexibility, and crucially, the potential to basically set your own income ceiling.
Based on your skills.
Demand?
Your skills, demand for what you do, your own drive. It lets you kind of bypass the local wage structure limits by creating your own value in the market.
Interesting.
Often serving international clients or niche markets where maybe the returns are higher.
Okay.
And beyond just the money, there's the general appeal of Portugal. We mentioned the culture, the landscapes, the cost of living, which is often more manageable than other Western countries.
Yeah, that pulls people in.
It really does. So for these people, self-employment isn't just like a career choice. It often becomes the most practical way, sometimes the preferred way, to integrate economically and build a fulfilling life.
Leveraging the quality of life, but with a business model that actually supports their financial goals.
Precisely. They get the best of both worlds, potentially. Okay, so we've painted the picture of why Portugal. It's appealing. But once you're sold on the why, the big question is, okay, how do I actually do this?
To practicalities.
Exactly. Let's dive into the nuts and bolts of launching your self-employed life here, starting with the absolute first piece of paper that opens all the doors.
Yes, the NIF.
The NIF. Tell us about it.
The NIF, or Número de Identificação Fiscal. It's basically your Portuguese tax ID number.
Okay.
Think of it as your unique identifier for, literally all financial and admin interactions in Portugal. It's foundational. Absolutely.
Foundational, meaning?
Meaning without it, you just can't open a bank account, sign a lease, get paid properly, or crucially for this conversation, register any kind of activity with the tax authorities.
Right. It blocks everything.
It does. And for non-residents, the sources highlight a really key detail.
Because
If you don't have a fixed address in Portugal yet, you must get your NIF through a tax representative.
a tax representative.
Yeah. It's non-negotiable for non-residents. They act as your official point of contact with the tax office.
So NIF first.
Mm.
Always. But what if I'm listening from, say, Canada, dreaming of Portugal, but I don't have an address there yet? How do I get this NIF? And this tax representative, is it really a must or just a good idea?
Great question. And it's why it's step one. It's your gateway. For non-residents, the tax representative isn't just recommended, it's legally required.
They're required.
They are your official contact point with the Portuguese tax authorities. They're legally responsible for ensuring you comply with tax obligations. They act as the go-between for official communications. They get notifications for you until you actually establish residency and get a local address.
Ah, I see. So the government needs someone they can officially talk to.
Exactly. Without them, the tax authority has no official way to reach you or hold you accountable. It makes it impossible to join the formal economy. It solves that immediate problem of needing a Portuguese address before you have one. If you try to move forward without a NIF or without that representative if you're a non-resident, you just hit a wall. You can't do the next steps.
Got it. So yes, for non-residents, totally non-negotiable.
Yeah.
NIF first, tax rep needed. Okay. Once you got that golden ticket, that NIF, what's the next big decision for your business?
The next critical step is choosing your activity category. In Portugal, every self-employed activity is carefully classified into specific tax categories.
Okay.
And this isn't just, red tape. It directly defines your tax obligations, especially around VAT, value-added tax, and your IRS, which is your personal income tax.
Right.
These classifications use what are called CAE codes. Clasificación das Actividades Económicas Portuguesa por Ramos de Actividad.
CE key codes.
Okay. Basically, they identify the specific industry or sector your work falls into. Graphic designer. Different code than the language teacher or a consultant. And each code has its own set of rules.
That sounds important, like really important. How does picking the right CAE code actually affect my future taxes? And do people mess this up often? Are there common mistakes?
Oh, it's absolutely critical. Choosing the right CAE code is crucial. I mean, imagine you're, say, a web designer, but you accidentally pick the code for, I don't know, a caterer.
Right. Suddenly they expect health inspections.
Exactly. The tax authorities might expect things totally irrelevant to you. The code dictates your tax obligations, what deductions might apply, maybe even if you need specific permits. An incorrect code that can lead to audits, fines, maybe missing out on benefits. So yeah, it's foundational for compliance.
So not just bureaucracy.
Not at all. And for someone with multiple skills, maybe doing a couple of different things, the source suggests you'd need to identify your primary activity. But it's also possible to register multiple CAE codes. But doing that needs careful thought. Probably professional advice, honestly. Each code can trigger different rules. A common mistake. Just picking the code that sounds closest without really understanding what it means for tax or regulations.
Worth taking time on this, then. Or getting help.
Definitely worth taking your time. Or yes, ideally consulting an expert.
Okay. So NIF secured, activity categorized with the right CAE code. The next logical step is making it official, right? Registering with the tax authority, the AT mandatory.
That's right. After the NIF and identifying your CAE code, the actual registration with the tax authority, the AT, is where your self-employment officially kicks off.
Okay.
And the sources say this can be done either online through the official tax portal, which is increasingly the way to go, much more efficient.
Makes sense.
Or if you prefer, you can still go in person to a local tax office.
Okay.
During this registration, you need to specify you're registering under IRS Category B. That's the one for self-employed folks.
Category B, got it.
And you'll formally declare the specific activity using your chosen CAE code that you plan to do. This declaration basically tells the tax authorities, here I am, this is what I do, and puts you officially into the self-employment tax system.
Okay, Category B. What are the key differences with that? And how easy or hard is it to change my activity later if, say, my business grows or I add a new service?
So Category B is your designation as a self-employed professional. Think consultants, artists, digital nomads, freelance designers, all that stuff. It's fundamentally different from Category A, which is for standard employed income.
Right.
Which means different rules apply for how your earnings are assessed, what expenses you can potentially deduct, even your Social Security contributions. It's a key distinction to grasp from day one.
Okay.
As for changing your activity later, the source doesn't detail the exact steps, but generally, yeah, you'd need to update your registration with the tax authority.
Makes sense.
Usually involves telling them about the new CAE code, maybe stopping an old one, while admin processes in Portugal are getting much more digital.
Which is good.
Definitely. Online changes are usually pretty straightforward if you know the system or have an accountant helping. Going in person might be better for some who want direct help, but online is certainly faster if you're comfortable with it. The system is designed to allow for changes, but you have to make those updates properly.
Right, keep them informed. Okay, so NEEF, CAE code, registered with AT under Category B. Now, looking ahead, there's a massive decision, one that really shapes your financial life in Portugal, choosing your personal income tax regime. Our sources mention three main options here.
Yes, this is a really critical strategic choice. It significantly impacts your tax bill and how much admin work you'll have. The three main regimes are, first, the simplified regime. This is usually best for people with, let's say, lower income and not a ton of expenses to deduct.
Okay.
It offers a simpler way to calculate tax. Your taxable income isn't based on your actual detailed expenses, but it's presumed based on a percentage of your gross income.
Presumed. How does that work?
Well, for service providers, the sources mention a presumed expense rate of 25%, meaning the system assumes 25% of your income went to costs. So you only pay tax on the remaining 75% of your gross income. The real insight here. For many remote workers, consultants, people with minimal overhead, no office rent, little equipment cost, your actual expenses are probably way less than 25%.
Ah, so you get a bigger deduction than your real costs.
Exactly. It's like a built-in tax break without needing to track every tiny receipt. It's Portugal's way of making self-employment really attractive for low overhead service businesses, cuts down bureaucracy massively.
Interesting. Okay, what's the second one?
Second is the organized accounting regime. This one requires you to keep, well, organized accounting records,
Makes sense.
tracking all your income and deductible expenses in detail. It's generally meant for those with higher income or people who expect to have a lot of detailed expenses they can deduct, because here you can deduct a wider range of actual costs.
But more work.
Definitely more meticulous record keeping. Often means you'll need an accountant.
Okay. And the third?
Third is the VAT regime. Now, this isn't really a separate income tax regime like the others. It's more like an additional layer that depends on your annual turnover.
Turnover meaning total sales.
Exactly. Your total billings. Depending on that amount, you might have to register for VAT, charge it on your invoices, and then pay it to the tax authority. Or you might be exempt if your turnover is below a certain level. We'll get to that threshold later.
Right, so that affects pricing and cash flow.
Big time. You're essentially collecting tax for the government.
Okay, so for someone just starting out, a foreigner maybe new to all this,
Yeah.
how do you strategically choose between simplified and organized accounting? And what's lower versus higher income here? Is there a number?
That's a brilliant question. It's probably one of the most common head scratchers. The choice really hangs on your expected income and the kind of expenses you'll have. The simplified regime is, well, simpler administratively. If your projected annual income is below the threshold where organized accounting becomes mandatory, which currently is around 200,000 euro, though that 15,000 VAT exemption threshold we mentioned is also a key point to consider initially.
Right.
And you don't foresee having many big, provable business expenses, then simplified is usually the default and often the most advantageous. That 25% presumed expense for service providers means you only pay tax on 75% of your income. If your actual costs are less than that, say you're a remote consultant working from home.
Minimal overhead.
Right. Then it's a clear financial win.
Okay.
However, if your income is higher, maybe heading towards that 200K mark, or if you expect significant verifiable business costs, buying expensive gear, lots of business travel, renting a proper office or studio.
Right, actual big expenses.
Then the organized accounting regime starts to look more strategic. Yes, it means hiring an accountant and keeping detailed records, but it lets you deduct your actual expenses. These could potentially cut your taxable income much more than that flat 25% presumption.
So it could save you more tax in the end, despite the hassle.
Potentially, yes. So lower income generally means below that mandatory threshold and higher income is above it, or if your actual costs consistently eat up more than 25% of your income.
So pros and cons. For a typical foreigner starting out, simplified seems easier.
Often, yes. The pros lean towards simplified for ease and lower initial admin burden. But the con is potentially dissing out on bigger deductions if your real expenses are high. It's that classic trade-off. Simplicity versus potential tax optimization.
Lots to consider there. Okay, beyond the main IRS regime, I guess some activities have extra hurdles. What about licenses? Surely not everyone needs a special permit.
You're absolutely right. It's definitely not a blanket requirement for everyone, but it is a critical check you have to make. While loads of activities just fall under the general self-employment rules, our sources are clear. Depending on what you do, specific licenses or permits might be necessary.
Like what kind of activities?
This mainly applies to regulated professions or sectors where things like public safety, professional standards, or specific legal oversight are really important. The source gives examples like activities in health, education, commerce, etc.
Ah, okay. Things dealing directly with people's well-being or money.
Exactly. Fields where direct interaction with the public or just the nature of the service requires extra authorization. The key advice here, check. Check with the relevant authorities, or maybe start by consulting the local city hall, Camera Municipal, to make sure you're fully compliant before you start trading.
Before, not after you get caught.
Definitely before. It's non-negotiable due diligence.
Why is checking for licenses so critical? What could actually happen if you just didn't? And how different is the process, say, getting a license for a therapist versus just being an online consultant?
It's critical because not having a required license can lead to really severe consequences. We're talking significant fines, legal trouble, even potentially being forced to shut down your activity completely.
Wow, okay.
Operating without a required license is basically operating illegally. It can wreck your reputation and your finances. Think about it, is a self-employed physio working without the right certification, that's a risk to clients.
Yeah, definitely.
Or maybe a private tutor working with kids without the proper background checks or permits. These kinds of professions and many others often involve directly impacting people's health, safety, education, hence the need for strict oversight and licensing to ensure quality and safety standards are met.
Public protection.
Exactly. And the process varies hugely depending on the activity. Getting a license for a health practice might mean proving specific qualifications, registering with a professional body, meeting strict hygiene protocols, undergoing inspections.
Sounds complicated.
It can be. A commercial activity, like opening a small shop or cafe, might need permits from the local council for zoning, sanitation, maybe even for putting tables outside. These can involve multiple government departments, specific documents, prints of qualifications, site visits. Compared to setting up as, say, an online consultant, where licensing is usually not an issue beyond the standard business registration, these regulated activities add a significant layer of bureaucracy, cost, and time.
Okay, so that's a big heads up for certain professions. Investigate that early.
Very early. It's a separate, essential research step.
Got it. Okay, registration's done, tax regime chosen, licenses checked. Next up, Social Security. Mandatory for the self-employed, right?
Right.
What does that actually involve for someone starting out?
That's correct. Paying into Social Security is a fundamental obligation for self-employed people in Portugal. It's not optional.
Okay.
The amount you pay is directly linked to your income and your chosen tax regime specifically. It's based on your declared income from the previous 3 months, the previous trimester.
Ah, okay, based on recent earnings.
Right. Registration itself is done online through the Social Security Direct Portal Segurança Social Direta. Contributions are usually paid monthly, and the amount fluctuates based on that declared income.
And why? What's the point of this mandatory contribution?
The system ensures that self-employed workers are part of the national social safety net. It provides a level of security that might actually surprise some newcomers with how comprehensive it is.
What does depends on income and chosen regime really mean for someone brand new, maybe with very little income initially? And crucially, what benefits do you get for paying this? How's it different from paying Social Security as an employee back home?
Okay, for someone brand new, the Social Security contribution is initially based on a percentage of your declared income. Specifically, the base amount they calculated on is typically 70% of your relevant income from the previous quarter.
Just 70% of income is the base.
Right. So if you earned, say, €1,000 in a quarter, they calculate your contribution based on €700. Then a rate is applied to that base, usually around 21.4%. The chosen regime matters because your declared income, which is the starting point for this calculation, comes from how your tax regime figures out your gross earnings. The big difference from traditional employment.
Yeah.
As an employee, both you and your employer pay in, and crucially, the employer handles deducting it and sending it off. As self-employed, you're entirely responsible for calculating, declaring, and paying your own contributions. It definitely requires more proactive financial management from you.
Right. It's all on you.
Yeah.
So what are the tangible benefits then? What does this buy you?
It buys you access to Portugal's social security and healthcare system, a pretty robust safety net, actually. It includes sickness benefits,
Yeah.
money if you can't work due to illness, assuming you've paid in for a certain period,
Okay, that's useful.
maternity, paternity benefits, really important financial support during parental leave,
Crucial.
unemployment benefits. Although the conditions are specific for self-employed, often linked to involuntarily stopping work and having paid enough contributions. Retirement pensions. Your contributions build towards your future state pension.
Long-term security.
Disability benefits. Support if you become permanently or temporarily disabled and can't work. So you're paying into a system that provides pretty vital support. It gives a degree of security that might otherwise be missing from the self-employed life. It's a key part of Portugal's social contract.
That's actually quite comprehensive.
Yeah.
Good to know. Okay, finally, we get to the day-to-day practical stuff. Issuing invoices. I assume this isn't just optional, it's required.
Oh, absolutely. You are legally required to issue invoices, facturas, or fatura recibos for all services you provide or goods you sell. It's not just about getting paid, it's fundamental for tax compliance and financial transparency.
Right, proof of income.
Exactly. Our sources highlight two main ways to do this. You can issue them electronically, directly through the tax portal. That's convenient, especially for lower volumes. Or you can use certified invoicing software. The source mentions Faturama as an example. These programs are often better if you issue lots of invoices, offer better tracking, can link up with accounting systems, and generally streamline the whole process.
Makes sense.
And interestingly, the source also notes some banks, like Millennium BCP, actually offer integrated invoicing software along with their business bank accounts.
Oh, handy. Keep it all in one place.
Yeah, potentially simplifying your financial management quite a bit.
So once these invoices are out there, what are the bigger implications for tax compliance? Does it just stop once the invoice is sent?
Not at all. Properly issuing invoices is critical because it directly feeds into all your tax obligations. Each invoice is a record of income, and these records are what the tax authority, AT, uses to check against your annual IRS declaration.
Oh, okay, they check.
They check. So beyond just issuing them, you have ongoing tax duties. This includes that annual IRS declaration, submitted using Form 3, Modelo 3. Think of it like Portugal's main yearly income tax return form. It consolidates all your earnings and relevant expenses for the year.
Okay. Form 3.
And if you're subject to VAT, you also need to submit periodic VAT declarations, usually quarterly, sometimes monthly, depending on your turnover.
Right.
And of course, paying any tax due on time is non-negotiable. Proper invoicing ensures your reported income matches your actual business activity. It prevents discrepancies, avoids potential fines or audits. It's really the backbone of your financial accountability as self-employed here. Needs consistent attention all year round.
Okay, that's a lot of groundwork covered. Foundational steps seem clear, detailed. Now let's pivot to the practical side of actually getting established. Documents needed, and importantly, how fast can you get this all done? What's the real timeline like?
Right, the practicalities. For documents, the sources are very clear. You'll need your passport or your residence card if you already have one.
Standard ID.
Proof of address. And, as we keep saying, you're Portuguese enough.
Can't escape the NEF.
You really can't. And the need for a tax representative for non-residents gets mentioned again here.
Yeah.
Just underlines how crucial that role is if you don't have that Portuguese address yet.
Okay.
These are the core documents. They underpin pretty much every administrative step, proving who you are and your fiscal connection to Portugal.
Can you maybe elaborate just a bit more? Why these specific documents, again on the tax rep role, why is it so vital for non-residents? Beyond just getting the NIF, it feels like such a unique requirement compared to some other places.
Sure. These specific documents establish three key things: your identity, your legal status, and your fiscal link to Portugal.
Okay.
Passport or residence card proves who you are and that you're legally allowed to be here, potentially to work. Proof of address confirms where you live, which is vital for official mail, and importantly, determining your tax residency status, a big topic we'll touch on later.
Right.
And the NIF, as we've covered, is your unique tax ID linking you to every financial transaction.
Makes sense. And the tax rep.
For non-residents, the tax representative becomes more than just a helper to get the NIF. They act as a crucial legal and administrative bridge.
A bridge? How so?
Since you don't have a physical presence or a verifiable address in Portugal yet, the tax rep essentially stands in for you on tax matters. They receive official tax notices for you, they're responsible for getting them to you, and importantly, they can be held fiscally responsible if you fail to comply with your tax duties.
Ah. So they have skin in the game, too.
Exactly. It gives the Portuguese tax authority a point of contact and accountability within Portugal. It makes it possible for non-residents to legally engage in economic activity before they're fully settled with residency. It reduces risk for the tax authority and streamlines things for the foreigner, ensuring tax duties are acknowledged and managed even if you're not physically here yet.
That actually makes a lot of sense now. It's a practical solution for the authorities.
Yep.
Okay, now timing. This is often a big concern. How long does it realistically take to get your self-employment activity up and running once you have your NIF and documents sorted?
This is actually an area where Portugal seems to shine in terms of efficiency, especially for straightforward activities.
Right.
For activities that don't need specific licensing, which covers a lot of self-employment. Consulting, online services, digital nomad type work, freelance writing.
Right, many common ones.
For those, the sources say registration with the tax authority and Social Security can be done surprisingly quickly, often within 1 to 2 business days.
Seriously, 1 to 2 days.
That's what the sources indicate. The process is typically immediate or very quick. It's a pleasant surprise for many who expect weeks of bureaucracy. Might be faster than getting your home internet connected.
Huh, that's impressive. Almost sounds too good to be true if you're used to slower systems elsewhere. But what if your activity does need specific licensing, like we discussed for therapists or educators?
Yes. If specific licensing is required, then the timeline definitely stretches out, as you'd expect.
How long are we talking then?
The sources suggest it can vary a lot depending on the type of activity and how complex the licensing is, but typically it takes between 2 weeks to 1 month.
Okay, still not forever, but definitely longer.
Right. It's because of those extra steps, applying for permits, getting approvals from different regulatory bodies, maybe inspections, detailed checks. It all adds time.
Makes sense.
However, the overall takeaway presented is quite positive. Most administrative processes can be resolved quickly, especially if the activity does not require special permits. It suggests a generally welcoming and pretty streamlined system for independent professionals if you've done your homework on licensing beforehand.
What things might cause delays even in those quick 1-2 day processes? And what does this speed imply for someone planning their move or career change, especially thinking about when they can start earning?
Good question. Even in the quick processes, a few things can cause hiccups. Number 1 is usually inaccurate or incomplete documents.
The paperwork needs to be perfect.
Pretty much. Any missing info, wrong forms, discrepancies that can halt things. Technical glitches with online portals, while not super common, can happen. Minor setbacks. For non-residents, how fast and efficient your tax rep is in getting the NIF sorted and providing documents can also play a role.
Okay.
But often, the biggest factor is just how prepared you are. If you land with all your documents ready, NIF in hand, clear on your CAE code and IRS regime choice, then yes, it can genuinely be very fast.
And what does that mean for planning a move?
It implies that the admin setup for self-employment in Portugal itself usually isn't the main bottleneck if your activity doesn't need special licensing.
Okay.
You can realistically plan to start earning relatively quickly after getting your NIF and doing the initial registrations. This makes Portugal really attractive for people wanting a swift transition to independent work, maybe as a digital nomad arriving or a remote consultant.
Right. Less downtime.
Exactly. But if your work does need licensing, you absolutely must factor in that longer lead time. Maybe apply for permits before you even move, or right when you arrive, or even before you leave home. Otherwise, you could have a period where you can't legally work.
So planning is still key, but the basic registration seems fast.
It enables a more agile entry for many, yes. But careful planning is always essential.
Okay, now let's zoom out a bit. Look at the bigger picture. The good stuff and the challenging stuff about being self-employed in Portugal. Our sources offer a really neat guiding principle for this decision.
Yes, the summary statement.
It says, If you value independence and flexibility and are willing to manage your career and finances, starting as a self-employed worker can be a good option. However, if you seek more security and labor benefits, you should consider these cons before making a decision.
That really does capture the core trade-off perfectly. And this is where you, listening, need to do some real self-reflection. It pushes you to think critically. How much do you truly value that independence, that flexibility, versus the safety nets of traditional employment? And what does managing your career and finances actually involve?
What does it involve?
It means taking on all the jobs an employer usually handles. Finding clients, marketing yourself, invoicing, doing your own taxes, planning for retirement, even setting aside your own vacation pay.
Right. You're the CEO, CFO, and intern all at once.
Pretty much. It's a big shift in mindset and personal responsibility. Needs discipline, foresight. This section is really about helping you weigh those deeply personal priorities and see if the scale tips towards self-employment for you.
Okay, so let's unpack the advantages first. What are the key pros, the real sweeteners for going self-employed in Portugal?
The sources list several really compelling benefits, things that make this path very appealing. First up, flexibility and autonomy. This is usually the #1 reason people choose it. Total freedom. You set your own hours, pick your clients, often choose where you work. Huge appeal for digital nomads or anyone seeking better work-life balance. You're in complete control of your professional path. Design a life that fits you.
Okay, that's big. What else?
Second, the potential for higher earnings depending on demand. Unlike a fixed salary, your income isn't capped. If your skills are in demand, you could potentially earn significantly more than in a standard job here, especially given that general wage structure we talked about.
You get what you earn, basically.
Directly. You benefit from your productivity and market value.
Okay.
Third, the simplified tax regime we discussed earlier. That's a major plus. Less bureaucracy, simpler tax calculations, especially good if you have low overheads, really cuts down the admin hassle.
Yeah, that sounded good.
Fourth, you get access to the Social Security and healthcare system. As we covered, even though you're self-employed, your contributions mean you're covered for things like sickness, maternity, and you're building towards a pension, a crucial safety net.
Right, you're not totally adrift.
Exactly. And finally, the sources mention low startup costs and less bureaucracy. Compared to setting up a full-blown company, just becoming self-employed is relatively simple and inexpensive. Makes it very accessible for individuals or small operations.
Okay, those are some strong points. Let's dig just a little deeper on each. Flexibility and autonomy, what kind of flexibility are we really talking about? And how does potential for higher earnings square with the unstable income we'll get to? Also, maybe just reemphasize why that simplified tax regime is such a big deal.
Yeah.
And access to Social Security and healthcare, what benefits specifically, and finally, what makes startup costs low compared to other countries, maybe?
Right, let's break this down. Flexibility and autonomy, it's really comprehensive control. Not just choosing when you work, though, that's huge. Designing a schedule around your life, family, whatever.
Yeah.
It's also choosing who you work with. Picking projects and clients that align with your values, your skills, saying no to things that don't fit.
That's powerful.
And geographic flexibility, too, for many,
Yeah.
especially in digital fields. Work from anywhere in beautiful Portugal, or even while traveling sometimes. It's about tailoring your work life to your priorities, not an employer's rigid structure.
Okay. Now, the higher earnings versus unstable income.
That's the heart of the entrepreneurial gamble, isn't it? The potential for higher earnings is real because you set your rates, you take on work, you benefit directly from your output and market value. That's very different from a fixed salary that might not reflect your true worth or keep up with costs.
Right.
But the instability comes because there's no guaranteed paycheck. Income swings with client flow, project cycles, market shifts, even the wider economy. The balance requires smart financial planning. Build that emergency fund, diversify who you work for, keep marketing yourself. You're trading a fixed, often lower ceiling for a potentially higher but definitely more variable income.
Got it. Requires a buffer and strategy.
Yeah.
Now, the simplified regime again. Why is it such a draw?
The simplified tax regime is a massive draw, especially for service providers, because of its sheer straightforwardness and the financial edge it gives, instead of tracking every tiny expense.
The 25% presumed expense.
Exactly. That 25% is just assumed to be your costs. It dramatically cuts down the admin, the need for complex accounting, makes compliance much easier, especially if you're new to the Portuguese system. And if your actual business costs are low, that 25% becomes a fantastic built-in tax deduction. It lowers your taxable income, cuts your tax bill, frees up your time, reduces stress.
Huge.
Benefits.
Okay. And the Social Security access, what benefits exactly?
Access to Social Security and healthcare specifically means you're fully plugged into the national system as a contributor. This gives you that safety net, eligibility for financial help during sickness, support for maternity or paternity leave once you meet contribution criteria, contributions towards your future retirement pension, help in case of disability. Plus, access to the public healthcare system, seeing doctors, getting hospital care under the same conditions as employed residents, often free or very low cost. It's fundamental well-being and long-term security. Peace of mind.
Okay, that's clearer. And finally, why are startup costs and bureaucracy considered low?
Compared to many other countries, setting up a business can mean forming complex legal entities, corporations, LLCs with high fees, big capital needs, tons of paperwork, multiple agency approvals.
Yeah, it could be daunting.
In Portugal, for a self-employed individual, it's mostly administrative. You generally don't need to create a separate legal company structure with shareholders and complex rules. It's mainly about getting the NIF and registering with tax and Social Security. The costs are minimal, maybe some admin fees for documents, or paying a tax rep or accountant if you choose. This streamlined approach makes it relatively easy and cheap to get started, especially for solo professionals. Lets you put your money into your business, not just into setting it up.
Okay, that's a very attractive picture of the upsides. Really compelling. But, like anything, there are challenges. Let's switch gears to the flip side. What are the downsides, the real cons of being self-employed in Portugal?
All right, the flip side. The sources point out several key challenges you absolutely need to consider realistically. First, and maybe the biggest one for many, unstable and irregular income. The direct opposite of that higher earning potential.
The roller coaster.
Exactly. Your income often fluctuates wildly depending on clients, projects, market factors. No guaranteed monthly check. That can be stressful.
Definitely. What else?
Second, you carry the full tax and administrative responsibility. Unlike having an employer handle deductions and filings, it's all on you. Calculating, declaring, paying your own IRS, VAT if it applies, Social Security. Requires diligence, understanding the system, or getting professional help.
Okay, more mental load.
For sure. Third, a big one. No labor benefits like paid vacation or subsidies. Self-employed, no paid holidays, no Christmas bonus, subsidio de Natal, no vacation bonus. Subsidio de férias, like regular employees get here. Time off means zero income for that period.
Ouch, that's a big difference.
It is. Fourth, costs with accounting or other professionals. Even with that nice simplified regime, many find they need or really benefit from hiring an accountant or tax consultant. Ensures compliance, helps optimize taxes, but it's an ongoing business expense.
Right, extra costs.
And finally, a tough one for new businesses. Social Security contributions required even with little or no income, meaning even if you're just starting out, not making much yet, you still have to pay into Social Security. That can be a real financial strain initially.
Okay, those are definitely things to weigh seriously. Let's really get into the reality of these cons. How can you actually mitigate that unstable income? What does tax and administrative responsibility look like day to day? Compare those no labor benefits to what employees get here again. Why are accountants often needed even with a simplified regime? And explain more about paying Social Security even with no income. What are the financial implications?
Okay, tackling unstable income. Mitigation strategies are key. Diversify your clients, don't put all your eggs in one basket.
Makes sense.
Build that emergency fund. Seriously, enough to cover several months of living costs. That's your personal safety net. Keep marketing yourself consistently. Nurture your network to keep work flowing. Some use flexible pricing or retainers to try and smooth things out. It's about building financial resilience.
Proactive management, got it. And the day-to-day admin burden.
Tax and admin responsibility means you're basically your own mini HR and finance department. Day to day. Diligently tracking all income and expenses. Every payment in, every business purchase out, making sure invoices are correct, sent on time, keeping track of tax deadlines. You're personally on the hook for calculating quarterly Social Security payments, periodic VAT declarations if needed, and that big annual IRS declaration. Requires organization, attention to detail, or reliably getting everything to your accountant. It's a constant background task.
Okay, now, the benefits comparison.
The no labor benefits is stark compared to Portuguese employment norms. Employees here typically get 22 paid vacation days a year, plus often a vacation subsidy, basically an extra month's pay for holidays, plus a Christmas subsidy, another extra month's pay, usually paid out over the year.
Wow, so effectively like 14 months pay for 12 months work.
Pretty much, for many. Self-employed, you get none of that. Zero. If you want time off, you don't get paid. No bonuses. You have to factor those lost benefits into your pricing. And consciously save for your own holidays, build your own 13th and 14th month fund if you want that buffer.
Big difference. And why accountants, even if the regime is simplified?
Accountants are often needed because simplified applies to the tax calculation, not necessarily to understanding all the complex rules, ensuring correct declarations, or navigating deductions.
Oh, okay.
Many find Portuguese tax law tricky, especially foreigners. Understanding CAE codes perfectly, VAT thresholds, what can still be deducted even in simplified, navigating the online portals often only in Portuguese. An accountant ensures you're compliant, helps find deductions you might miss, gives peace of mind, prevents costly mistakes that could easily cost more than their fee. Their expertise often pays for itself in tax saved or time freed up.
Okay, that makes sense. Finally, that Social Security payment even with no income.
Right. The Social Security contributions required even with little or no income point. This is critical for new ventures. After any initial grace period, often about 12 months where you might be exempt or pay less, your contributions are based on 70% of your declared income from the previous quarter.
Okay.
But, crucially, there's usually a minimum contribution base. So even if your income in a quarter was extremely low or even zero, you might still have to pay that minimum amount.
Ouch. Even if you earned nothing.
Potentially, yes, depending on the minimum threshold at the time. This can be a major burden for startups still finding their feet or freelancers hitting a slow patch. Requires careful financial forecasting, having enough cash reserves to cover these mandatory payments, even when revenue is down. It's a fixed cost that can make the early days financially tough. Needs a solid buffer.
Okay, we've thoroughly weighed the pros and cons now. It's definitely a path that demands a different kind of financial discipline. But, hey, it's not all challenges. Portugal does offer some really attractive tax benefits that can definitely sweeten the deal for the self-employed if you know how to use them.
Exactly. And this section is key for anyone wanting to optimize their finances as self-employed in Portugal. Understanding and using these benefits can make a real difference to your bottom line, can help offset some of those cons we just talked about. It's about working smarter within the system.
All right, let's run through them. That simplified regime keeps coming up. Its advantages seem central.
Yes, the simplified regime is definitely a cornerstone benefit. Its main advantage is less bureaucracy, sure, but specifically, it's the possibility of reducing the taxable base through presumed expenses.
The 25%, again, for service providers.
Typically 25% for service providers, yes, according to the source. Meaning if you bill 10,000 euros, only 7,000 euro is treated as taxable income. The other 2,500 is just presumed to be costs, whether you spent that much or not.
Which simplifies things hugely.
Tremendously, and can be a big tax advantage if your real running costs are lower than 25% of your income. It's like a built-in deduction many find incredibly helpful.
Okay, and what about deducting expenses in the other regime, organized accounting? How does that work differently for saving tax?
Right. In the organized accounting regime, the benefit flips. It's about having a much wider scope for deducting actual expenses. If you choose this, you can deduct a wide range of expenses directly related to your activity.
Like what kind of things?
Could be office rent, utility bills, business travel, professional training courses to improve your skills, buying equipment like laptops or software, marketing costs, even a slice of your home expenses if you have a dedicated home office.
Okay, so real costs.
Exactly. It allows for a more precise and potentially much higher reduction in your taxable income because it reflects your actual spending. Ideal for businesses with significant provable overhead.
Gotcha. What about VAT? We mentioned an exemption earlier. Can that really help new businesses get started without extra admin?
Absolutely. This is a massive benefit for smaller operations or startups.
Yeah.
The VAT exemption. If your annual turnover is below 15,000 euros, you might be exempt from charging VAT.
15,000 euros.
Okay. Yes. This is huge because it simplifies your pricing. Clients pay exactly your quoted price, no VA added, and it drastically cuts your admin burden. No need for periodic VAT returns, managing VA payments, or refunds.
That sounds like a relief.
It really is. It can also make your services potentially more competitive, especially for local clients, as you don't have that 23% standard VAT rate tacked on. It's a big financial and administrative help in the early stages.
Definitely a game changer for small scale. Okay, Social Security. We talked about the burden. Are there ways to lessen that sting, especially when you're new?
Yes, thankfully. There's a valuable Social Security contribution reduction available. The source mentions the possibility to reduce contributions in the first years of activity or for lower incomes.
Okay, so help for newbies.
Exactly. It acknowledges those early financial hurdles. The specifics usually involve being new to self-employment or having low initial income. It allows for a phased-in or reduced contribution rate for a set period, maybe the first year or so, lessens that immediate financial pressure, gives crucial breathing room when cash flow might be tight.
That's really good to know. Finally, anything for keeping skills sharp or innovating? Incentives for training or tech?
Indeed, there are. Portugal offers training and innovation incentives. This allows for the deduction of professional training costs or tax incentives related to technological innovation.
Interesting.
It's a forward-thinking benefit, encourages self-employed people to invest in their skills and use technology to advance their business. So, if you take a course directly related to improving your services, learn a new coding language, get an advanced marketing cert, those costs can often be deducted, lowering your taxable income.
Okay.
Similarly, investing in new software or tech that genuinely innovates how you do business could qualify for tax incentives. It supports continuous professional growth and helps businesses stay competitive.
These benefits sound really appealing, quite strategic actually. How does someone really make the most of them? And what value does an accountant or tax consultant truly add here? Is it worth the extra cost?
To really maximize these, you need a solid grasp of Portuguese tax law and you need to stay on top of things, which is precisely why the source stresses that to maximize benefits, many self-employed workers hire an accountant or tax consultant.
Okay, so they really do add value.
Immense value, often far more than they cost. They can ensure compliance, keep you legal, file everything correctly and on time, avoids costly fines or issues from simple mistakes in a new system.
Peace of mind.
Optimize your tax regime. Look at your specific situation, activity, income, expenses, and advise if simplified or organized accounting is truly best for you. Could save you thousands by making sure you're on the most efficient path.
Strategic advice.
Identify all eligible deductions. Even in simplified, there might be some direct deductions. In organized, they'll meticulously catch every deductible expense you might miss, lowering your tax bill, things you wouldn't even think of.
Okay.
Navigate VAT. Advise exactly when you must register for VAT, how to invoice correctly if you are, handle the declarations, keep you compliant.
Handle the complexity.
Leverage incentives. They stay updated on all the latest tax breaks, like for training or innovation, ensuring you claim everything you're entitled to.
Don't miss out.
Strategic planning. Help you plan for future tax payments, understand cash flow, forecast finances more accurately, helps you make smarter business decisions. Basically, an accountant is your financial navigator. They ensure you follow the rules and benefit strategically from the system. It's an investment in peace of mind and financial efficiency. For you, listening, what benefit stands out as most surprising or valuable?
For me, I think that VAT exemption under 15K turnover is a real game changer. It just removes a massive layer of complexity for brand new small businesses. That's fantastic. It makes starting seem much more achievable. But speaking of complexity, what if you're not starting totally fresh? What if you're already self-employed somewhere else? Can you just bring your business, your clients, your professional identity to Portugal? Here's where it gets really interesting.
Yeah.
Because yes, it is absolutely possible.
That's right. Transferring your existing self-employed activity from another country to Portugal, definitely doable. But, and this is a big but, it's crucial to understand it's a multi-layered process.
Okay, not just flicking a switch.
Not at all. It requires careful navigation of formalities, adjustments, both tax-wise and registration-wise. And importantly, in both your home country and in Portugal, it's a full international transition. Needs foresight, attention to detail.
Okay, so let's break down the steps for transferring. I'm guessing NIF is still step one, even if you're already an entrepreneur. Same as starting fresh.
Correct. Step 1, obtain the NIF in Portugal. Just like for newcomers, this is the absolute foundation, the prerequisite. If you don't have one, you need it.
Okay.
And again, if you're not yet resident in Portugal, you'll need that tax representative to get it for you, that professional or company who takes fiscal responsibility until you're settled. Ensures the Portuguese tax authority has a contact from day one.
Okay, NIF first, always. Then, How do you register your existing activity? Do you just tell them you've arrived? Or is it a completely new registration process?
Step 2. Register with the Portuguese tax authority. Once the NIF is sorted, you then register your professional activity with the AT, the Tax and Customs Authority. It's essentially the same process as starting a new self-employed activity within Portugal.
Ah, okay. So you start that process again.
Right. You can do it online via the Portal das Finanças or in person. You'll select Category B for self-employed, declare your activity using the right CAE codes, choose your IRS regime, simplified or organized, and sort out your VAT status. It's not just a notification, it's a full, formal re-registration to get you properly set up under Portuguese law and tax rules.
This next step sounds super critical for an international move. Verifying tax residency. What are the really big implications here? And how do those tax treaties actually stop people getting taxed twice on the same money?
Indeed. Step 3. Verify tax residency. This is absolutely pivotal. If you spend more than 183 days in Portugal within any 12-month period, or if Portugal becomes your main home, your habitual residence, you'll almost certainly become a tax resident here.
Okay. And the implication?
The profound implication is, from that point on, you must declare your entire worldwide income in Portugal.
Worldwide, wow.
Yes. Income from clients outside Portugal, rent from property abroad, investments in foreign banks, any other source. Regardless of where it comes from, it has to be declared to the Portuguese tax authorities.
That sounds like it could lead to double tax.
It could, but that's where double taxation treaties come in. Portugal has these agreements with many countries precisely to prevent that.
How do they work?
They're bilateral deals that specify which country gets the primary right to tax certain types of income, or they provide relief mechanisms. For example, a treaty might use the credit method. Portugal taxes your worldwide income, but gives you a credit for taxes you already paid in your home country on that foreign income, effectively offsets the Portuguese tax. Or it might use the exemption method. Certain income earned and taxed back home is simply exempt from tax in Portugal. The exact rules depend entirely on the specific treaty between Portugal and your country.
Complex stuff.
It can be, which is why getting advice from a specialist in international tax is so often recommended. They can navigate those specific treaty rules for you. Now, if you tried to stay a tax resident in your home country while mainly working in Portugal, that gets even more complicated.
Yeah.
You'd need to check very carefully with both countries' tax authorities how your income would be treated to avoid issues. Usually simpler to align your tax residency with your actual life.
Right. Makes sense. Those treaties sound vital, like a safety net.
Yeah.
Okay, beyond Portugal, what do you need to do back in your original country? Just send a quick email saying you've left. Or is it more involved?
Step 4. Cancel activity in the country of origin. This is often missed, but super important for a clean break. If you were formally registered as self-employed back home, you must officially tell their tax authority you're closing that activity or changing your tax residency.
Formally tell them.
It typically involves submitting specific cessation forms, canceling your original registration number, filing any final tax returns for the period you operated there, and making sure all outstanding taxes are paid up.
Okay, settle your debts.
Exactly. The exact process varies hugely by country. Could be a simple online form, could involve audits or detailed final declarations, but failing to do this could mean ongoing tax obligations, penalties, or compliance headaches back home, even after you've moved. You definitely want to avoid that. Get clear instructions from your home country's tax office.
Good advice. What about Social Security payments? Will you end up paying in both countries? Or are there ways to avoid double contributions, especially maybe if I'm moving from another EU country?
Step 5. Evaluate taxes and Social Security contributions. Okay, when you move your activity to Portugal, yes, you will need to start paying into Portuguese Social Security. It's mandatory based on your income here.
Right.
However, the good news is there are often agreements between countries to stop you paying double. Within the EU, for instance, there's strong coordination.
How does that work?
EU citizens can often get what's called an A1 certificate from their home country's Social Security office. This can allow you to remain under your home country's system for a period, usually up to 24 months, even while working in Portugal, meaning you keep paying contributions back home and not in Portugal during that time. Avoids double payments.
The A1 form. Heard of that.
Exactly. For non-EU folks, specific bilateral agreements between Portugal and your country might exist to prevent double contributions. You'd need to check. Importantly, once you do establish tax residency here and start paying into Portuguese Social Security, those contributions make you eligible for Portuguese benefits, sickness, maternity, pension contributions based on the rules here.
Okay, so coordination exists. Need to check the specifics. What about VAT? How does that transfer? Pick up where you left off, or is it a totally fresh start?
Step 6. Check VAT regimes and tax obligations. This mostly mirrors what we said for new starters, but you also need to consider your old V8 status. If your activity involves V8, you need to see if you need to register for VAT collection in Portugal.
Based on Portuguese turnover.
Exactly. Based on your annual turnover in Portugal and what you do, same rule applies. If your Portuguese annual turnover is below $15,000, you might get that VAP exemption. No charging VAT, no regular VAT returns.
Okay.
If you go over that threshold, you'll need to register, start charging VAT to clients, and submit those periodic VAT declarations, quarterly or monthly. Plus, keep on top of all other Portuguese tax duties, like the annual IRS declaration, Form 3. So yes, for VAT, it's basically a fresh start based on your activity within Portugal.
Got it. Are there any other, maybe more practical or logistical things to think about when making this kind of international business transfer?
Yes, Step 7 covers other procedures, things often overlooked but important for a smooth move. First, licensing. We keep coming back to this, but it's crucial. Just because you are licensed back home doesn't automatically mean you are in Portugal. If your activity needs a specific license or permit here, again, think health, education, finance, you need to get the Portuguese one. It's about meeting local regulations, essential for legal operation. Research the specific requirements for your profession in Portugal.
Right. Don't assume qualifications transfer automatically.
Never assume. Second, bank account change. While maybe not legally mandatory to close your old international account, it's highly recommended. The source calls opening a Portuguese bank account good practice, even essential, especially if you'll have Portuguese clients or local costs.
Why is that cool?
It just simplifies everything. Receiving payments from local clients, managing your money within Portugal, paying local taxes and social security contributions. A local account makes it all much easier, potentially cheaper with fewer international fees. It integrates you better into the Portuguese financial system. Very practical advice.
Okay, that makes total sense. As we start to wrap up this really detailed deep dive, let's try and boil it down. What are the absolute most important considerations for anyone thinking about this journey into self-employment in Portugal, whether starting new or transferring?
Absolutely. Let's consolidate. The key takeaways from looking at self-employment in Portugal for foreigners seem to be these critical points. First, tax residency. This is huge. If you become tax resident here, remember, worldwide income reporting. Tax treaties help avoid double tax, but understanding them is complex. Knowing where you are tax resident is fundamental.
Get the clear first.
Second, documentation and local requirements. Compliance, compliance, compliance. Make sure you fully understand and meet all tax and legal duties, not just in Portugal, but also back in your home country, especially regarding properly closing things down there. Missing steps can cause long-term problems.
Dot the I's, cross the T's.
And third, maybe most crucially, tax consultancy. Given how complex things can get, especially with international moves and the details of Portuguese tax law, the source strongly advises getting expert help. A specialist in international taxation, invaluable.
Why invaluable?
They can untangle those tricky tax treaties, help optimize your finances across borders, ensure you're fully compliant everywhere, prevent costly mistakes. While Portugal offers a welcoming, fairly streamlined setup for self-employment, good preparation and professional guidance are really key for a successful transition. Don't try to wing it on the complex stuff.
Sound advice. So, what does all this mean for you, our listener? We've laid out the steps, the tax advantages, the practicalities of becoming self-employed in Portugal, starting fresh or transferring. But maybe the real challenge isn't just how to do it. Maybe it's more about how effectively you can take your unique skills, your vision, and translate that into a stable, thriving business in this new economic landscape. Given the flexibility, the potential earnings we talked about, what parts of your own professional life could really flourish under this Portuguese model of self-employment? And what might that force you to redefine about work-life balance or financial security for yourself? Something to think about. Thank you so much for joining us on this deep dive into self-employment in Portugal. We really hope this has given you the clarity and the insights you need as you consider this exciting path. And hey, we genuinely love hearing from you. Please share your thoughts, any questions you still have, or maybe experiences you've already had with self-employment in Portugal. Drop them in the comments below.
Absolutely. And if you found this deep dive valuable, please do give us a like and subscribe to our channel. Your engagement, it honestly encourages us, the Access Portugal team, to keep digging deep, keep providing good information, and keep opening the door to Portugal for people all around the world. We do that through more deep dives just like this one. Your community, your subscriptions, your comments, they really spur us on to provide good information and help open that door to Portugal.
Until next time, keep exploring, keep learning, and keep diving deep.